Hello, everyone, and welcome to our latest Frederick County Chamber of Commerce webinar. Today, we're going to be talking about enhancements to the Paycheck Protection Program. It's a pleasure to welcome you to our latest webinar. Some of you that are with us today aren't really familiar with the Chamber, so I wanted to give a moment to talk about why we're doing this. About a year ago, we partnered with Tony Bowie and her firm Max Life, a regionally respected trainer, coach, and consultant in human resources and diversity, equity, and inclusion. Tony has helped us here at the Chamber to design, launch, and facilitate our Racial Equity Leadership Council. The council's work, with the support of our Chamber Board of Directors led by Dr. Andrea Chapdelaine from Hood College, has resulted in some significant developments in minority business opportunities in Frederick County, especially in the area of public sector contracting. Today, we're here to learn about changes that the Small Business Administration has made to the Paycheck Protection Program, changes that make it much easier for minority-owned businesses and underserved communities to apply for and receive these funds. And remember, these funds are your money. The taxes that you've paid are what provide for these programs. So don't ever feel like these aren't programs for you. They are programs for you that you are funding. I'm thrilled to be able to introduce both our moderator for today as well as our presenter. They're both men I know and have gained and grown a deep respect for as professionals and as friends. Sherman Coleman has dedicated his professional life to creating economic opportunity with a focus on small and minority-owned businesses. And Chris Clemons, Woodsboro Bank's outstanding VP and Commercial Banking Services Manager, has built a great reputation on building their small business partners into larger and more profitable businesses. And both men are members of the alumni of our Leadership Frederick County program. So without further ado, I'd like to turn the time over to my friend Sherman Coleman to get us started. Sherman?
Thank you, Rick. And good morning, everybody. And I would just like to thank everyone for attending today and allowing us to come into your presence. I'm deeply honored to be a part of this. And I want to congratulate the Frederick County Chamber and Woodsboro Bank for putting on the webinar today. One of the things that I just want to emphasize, today's program is special because we have Christopher Clemons. And one of the most important things about any webinar or anything you attend is the presenter. And Christopher Clemons is a subject matter expert in this field. So that only adds to the credibility of this event. The fact he's a subject matter expert and well-versed. And one of the things you might want to say, well, why does today matter? Today matters because this gives you a part and a vital role in being part of the process. We always talk about trust the process. Well, you have to know the process. The powerful thing about anything in life, you have to have information. Information is power. And that's what you're going to get today. But along with information is only powerful if you know how to use it. If you don't know how to use information, then what power does it give you? What use is it for you? What good is it going to do you? So take the information down, take a heed what what Chris talks about, and and I just like to add this other important piece as well. I've worked with minority businesses and people who want to start businesses, and I tell them the two things that you need to start a business, other than the idea, you have to have an attorney and you have to have a banker. Those are the two most important people you need to have in your life when you're starting a business or while you're in business: an attorney and a banker. And I feel confident that we don't have the attorney with us today, but we definitely got the banker. And without further ado, Chris Clemons.
Thank you, Sherman. Appreciate the kind words and kind introduction. And Rick, you as well. Appreciate the opportunity to join you all today and share a little bit of information about this program. The PPP program has its roots last year in the original coronavirus rescue bill that came out. This was a way to divert federal funds to struggling businesses who were adversely impacted by the pandemic. And really what separates this program from a lot of other programs like the SBA EIDL loan program is that this was funneled through the banking system. And that was a way for the SBA to get money out quickly to businesses that were in need. Last year, hundreds of millions of dollars were dispersed to the business community, and the banks provided a ready source of labor and capacity to funnel that money as efficiently as possible. So the program has evolved over time, and this is really the third round of PPP. There was a first round last year in April. The funds were replenished in June, and then a new round where people were able to take a second draw or a first draw if they weren't able to obtain one last year was introduced in January. The guidelines have changed over time, as I mentioned before. And in this case, a couple weeks ago, the new administration had introduced several changes to the program that make it a little more accessible, particularly to small business owners. One very important change was made to businesses that file as a sole proprietorship under their Schedule C, which that's a game changer, and it actually means the difference between qualifying for a PPP and not qualifying. So what I'd like to run through today is the changes that were made a couple weeks ago and give sort of a brief overview of them. We're going to save a little bit of time at the end if there's any questions in the chat. If there's individual questions, certainly, you can reach out to myself or one of my bank colleagues or to your current bank if you have a banking institution that you're working with. In any case, the one disclaimer I want to give here is that this information is directly from the SBA, and I've inserted it into my presentation. Obviously, the SBA can change regulations at any time, and typically the changes that they've made have been to the borrower's benefit. But with that being said, they are always subject to change. And one thing that if I can impress upon everyone on this call, one thing that's important is to look at this sooner rather than later. Currently, the expiration is March 31st, and that means that your loan has to be approved by the SBA by March 31st. There's talk of extending that, but the one thing with the extension is it can be a little bit of a double-edged sword, and that's also more time for the money to potentially run out. So I'm not saying you have to drop everything you're doing today and apply, but certainly within the next week, I would, if you're considering applying, certainly make it a priority to start the conversation with a bank. That being said, if we could go to the next slide, Caitlin.
Sorry, for some reason, I'm having a little bit of a technical difficulty accessing the ability to move forward in the presentation. So if you guys could just give me a quick moment to figure out why that might be. Sorry about that.
Technology is a wonderful thing when it works, and a source of a little bit of comic relief if it doesn't.
Well, that's no problem. In the media industry, this is known as gap time. So we need to fill it. So, and Caitlin will get this squared away. She's an expert on this. But I just wanted to put out there, you can see how important it is to follow guidelines and timelines. You have to be aware of that. Because if you miss a guideline or timeline, that could, put things in disarray for you. So be real conscious of that, make an effort to meet those guidelines and timelines. I see we joined back by Rick. I'm gonna turn it over to Rick.
So I urge everybody, if you're thinking about this, as Chris said, now is the time to have this conversation with a lender. And the key is it's easier if you can work with the lender that you're working with currently with your business, just because they know you and they have a professional relationship with you. But I want to stress that my experience over the last year, PPP or sports from the federal government, is local banks are more effective at this than larger fiduciary institutions. So I see Caitlin's got us back online, but if you have a problem with your dealing with your lender, to take advantage of these changes Chris is going to talk about, reach out to one of our local banks, because I can tell you, just based on personal experience, hundreds of companies have benefited from these programs by dealing with a local lender who works with small business owners on a regular routine basis. So turn it back over to Chris.
Right. Thank you, Rick. So on the slide, you'll see the biggest change related to these PPP loans has to do with the Schedule C, which, as some of you may know, is the form on the federal tax return where you show your business revenues and expenses and what your net profit would be if you're a sole proprietor or a single member LLC. The changes made to this form are such that many clients who were unable to obtain a loan last year because they showed a loss are now able to qualify. So one important thing to note here, though, is when I talk about these changes, if you have already received your PPP loan, I don't know why you'd be on the call, but just in case, the revisions here are not retroactive. So if you've already had your loan funded and everything's closed, we can't go back and increase your loan amount. That it's unfortunate, but that's just the way that the SBA set things up. So if anyone has that question, I wanted to kind of head that off at the pass. The interim final ruling, the IFR and new application forms were posted on the SBA's website. And the SBA began filing these or accepting new applications for Schedule C filers on Friday, March the 5th. That means that these rules are the law of the land now, and that if you initiate a new application, you will be covered under these changes, which in my opinion are changes for the better. Next slide, please. All right. So the biggest change, as said before with the Schedule C, is that for sole proprietorships or single member LLCs, naturally, there are opportunities to reduce your profit in order for you to maybe claim less in taxes. And recognizing that, borrowers who file a Schedule C are now eligible to use their gross income rather than their net income on these PPP loans. There is a cap on it, and the amount that you can use as your basis for calculating the loan is now $100,000. So if your gross income on your business was 100 or over, 100 is the max number you can use. However, if you were a smaller business, let's say your gross receipts were only 50,000 and you had a profit that was either zero or negative, you can use that 50,000 as your basis. If you had come in last year under the new rules or the old rules, it would unfortunately bar you from qualifying for a loan. However, with this change, a significant number of small businesses, and this is just from my own experience, have come in and received their first draw because they weren't able to last year. What you do here, and obviously this is just informational. I won't get too granular here on the calculations, as they are. You will have access to this later. But once you take that gross amount, And if you're a sole proprietorship with no employees, all you need to do is divide that number by 12, which gives you an average monthly income, and then multiply that by 2.5, and that gives you your PPP loan amount. So if your gross sales were 100 or more, the maximum loan that you could obtain is 20,833 by that math. Here, you're able to get a loan whereas last year, if you had a negative or zero profit, you wouldn't be able to claim anything. You would be ineligible. So that is a giant change, and I think one that can help benefit many people on this call. If we can go to the next slide, please.
Hey, Chris, can you interrupt just 1 second? We had a question from Adrian Hawkins. She said, do you have to have your business registered with the state of Maryland to qualify? I asked because my business recently resolved in 2020. I'm planning on re-registering my business via Maryland Business Express.
Okay, so here is the rub there. If you were a sole proprietorship, that technically does not require Maryland registration, because it's not like it's an LLC or a corporation. If you are not, if you are a corporation or an LLC and you're not in good standing with the state of Maryland, that could cause an issue. But if you resolve that prior to you applying for your loan, or at least closing your loan, then the bank can probably work with you.
Thank you.
Yep. Okay. For businesses that have employees, the calculation's a little more complicated, but it leads to you being able to get a larger loan. So you would take your owner compensation as a share of payroll costs. You could take either your net profit or your gross income, follow a similar calculation, and then you can add your eligible employee payroll costs, cash and non-cash expenses that are paid for the purposes of payroll, and also employer contributions to health insurance and retirement if that's something that your business offers. From there, you would follow a similar calculation where you would determine what your average monthly income is and multiply that by 2.5. From there, you're in business as long as you have a positive number and can submit that to the SBA or to the bank to submit to the SBA. Again, oh, thank you. Thank you, Tamar. One of our participants here today had posted the way that you can check the status of your business. So that's a helpful link. If there is a good standing issue, the most common thing I've seen is that there may have been failure to file a personal property return or pay a fee. So that can be something that's usually easy to resolve. So hopefully, if anyone's showing that you're not in good standing, you can certainly follow the process to resolve that and hopefully get your PPP loan after it's resolved. Okay, next slide, please. One thing that changed with this round of PPP is that you're allowed to get a second draw if you received a first. And recently, last week, if you received a first draw in January when the program opened back up, you're eligible to get a second draw so long as your first loan has been fully dispersed and the money used. So there is a potential that you could get two loans so long as you use the first one and apply and fund the second one before the expiration date. One big change with the first draw over the second draw over the first draw is that the loan amount maximum is changed, which that doesn't impact most small businesses. That's just, I'm posting kind of verbatim from an SBA presentation. But one major change is that restaurants are able to get a larger loan amount and it's restaurants, hospitality, anything that has an industry code beginning with the 7-2. We call it a NAICS code, NAICS. That's something that kind of classifies what industry your business is in. But if you are restaurant or hospitality, you qualify for a 3.5 times your average monthly payroll cost if you fall within that industry. So that's a game changer for some businesses. The other piece of it is that the Schedule C changes apply to second draw loans as well. So that again is a benefit and a positive change to the program. Next slide. There is also several changes that have been made for the eligibility requirements on PPP loans. And I wanted to walk through those because there were certain certifications that needed to be made on an application regarding the history of the borrower or potential past activities or issues. And they've revised those certifications to open up the PPP program to a wider range of applicants. So if we can go to the next slide, I'll kind of walk through them. One is they eliminated the restrictions on non-financial fraud felonies. Before, they were pretty much just outright barred. They eliminated this restriction on business owners who have had prior non-financial fraud felony convictions. This elimination is not retroactive. So, certainly it's, if you were denied in the past last year under a different program, you could in theory come back now. The restrictions on businesses with 20% or more ownership who have had an arrest or conviction for felony fraud related to financial assistance, that restriction still remains in place. And if you're currently incarcerated for a felony at the time of the application, you're still barred from participating in the program. Lenders have to follow and continue to follow the process for resolving hold codes that pop up. And this is something I wanted to talk to specifically after we finish this slide. Hold codes are something that the SBA can bring out to the forefront if there's a particular issue with a loan. And really, before we go to the next slide, I want to kind of explain this. This is something that a lot of borrowers who have had trouble obtaining a PPP this time have fallen into. And it all stems back to last year. What happened last year is that there was such a rush to get PPP funds out that first draw loans were made without going through some of the validation that the SBA normally does for a loan. And as a result, if a borrower comes back for a second draw this time and that validation issue hasn't been resolved, they put a hold on the application and you can't obtain an approval until that hold is resolved. The hold can be anything from maybe a mistyped tax ID number on an application. In some cases, I've had holds pop up that say that the business's the location doesn't match up what the SBA records say. There could be past criminal activity that would pop up as a hold, and you'd have to prove that that was either not the case or the activity was something that was allowed within the rules. Many banks have struggled with getting holds resolved, so the SBA has made that process easier. And I can tell you, we had probably a dozen or so PPP loans at my institution that we had to go through the process of resolving holds. If there is a hold on your account, I can't stress enough, once you've applied, to work with the bank to as quickly as possible get them the documentation they need to remove that hold so that you can keep your application moving forward.
Chris, how would you handle that situation if there's a situation where the conflict is in, it hasn't been resolved yet? You know, they're still working on getting it resolved, the hold itself, it's in a process, litigation, what have you. How would you handle that?
I think the best thing you can do at that point is if you get your lender some kind of documentation that explains the situation. And I don't want to speak for all banks. I can tell you how we would handle it.
Mhm.
What I would do is if it's something that is not concrete cleared up, I can submit a letter or some sort of documentation to the SBA, subject to their review, and see if that's sufficient to resolve it. I had a borrower, just kind of a story here. I had a borrower a couple months ago during the early stages of the program that it said they had a criminal history, and they absolutely did not. It was someone I banked for 20 years. I don't even think they had an unpaid parking ticket. And what the SBA asked for was they wanted a notarized letter basically saying very clearly, I do not have any criminal history. I am not aware of any past criminal activity. And I am saying this under, penalty of perjury that this is not true. And we sent that notarized letter in, and everything was fine.
Well, that just brings home what I said early on about having a personal relationship with a bank and banker. They can
Yep.
be your advocates in a lot of different areas. Thank you
Yep.
for that.
Absolutely. Next slide, Caitlin. All right. There's a couple other restrictions that were removed. And one of them that I think is really important is if there was any issues with student loan debt, previously, if you had either defaulted on or were late on a student loan payment, then that would bar you from participating in PPP. And this was non-negotiable. It was something last year. If you had the delinquency, I just had to say, hey, I'm sorry. This got flagged. I can't approve the loan. It's been eliminated now to where businesses owned or controlled by owners who have federal student loan debt that's delinquent or is defaulted or has caused a loss to the federal government, you can apply for a PPP. They've also made it retroactive so that it's really a moot point on the retroactivity. But essentially now that if you had a student loan debt and that went delinquent after you got your PPP, you're not in default on your PPP. And then finally, the SBA is removing any hold codes. So if you started to apply, your account was put on hold because you had a student loan debt issue, that's now being removed. I saw a question pop up.
Will banks ask for both 2019 and 2020 income tax returns, or only 2020 tax return if filed already?
Okay, so this is a great question. And really, I'm going to give a couple answers to this. One of the biggest things about the First Draw PPP is that it doesn't have the revenue reduction requirement, whereas the Second Draw does. On Second Draw PPP loans, you have to show that your sales declined for one quarter compared from 2019 to 2020. So that might be why a bank is asking for both.
Mhm.
But when it comes to 2019 or 2020 tax returns for determining loan amount, one or the other is fine. And what I've been suggesting to borrowers is use the one that gives you a higher loan amount. Not everyone has filed their 2020 returns, but if you have filed them and 2020 gives you a better gross, say for Schedule C purposes, you absolutely can use your 2020. You know, that's just based on my understanding of the SBA regulations.
Good.
Yep. Okay, next slide, please. Yep, thank you. So another thing that was changed with regard to restrictions is that early on, there was a restriction on non-citizen business owners. They were trying to, you know, benefit U.S. citizens. What they did here is that all lawful U.S. residents have access to PPP. The change is now that if you have if you are not a citizen but you're a legal resident, you can use your tax ID number that's issued by the IRS. It's a 9-digit number, usually follows the format starting with 9, kind of looks like a social security number. You can use that on your application and you will not be denied strictly on the basis of whether or not you're a citizen. Okay. And really, I think the last slide is really any other questions that we have. You know, we certainly have a little bit of time left here, but if there's anything that you want to ask Sherman or Rick or I about, you know, we're here.
Well, let me jump in this, Chris.
Yeah.
Now, I've been wondering this for almost a year now. What's the overall prevailing feeling that people have about the PPP? How do they look at it? And the second part of that question is, do people trust the process?
Yep. Great question, Sherman. And I can give you sort of my view on it. And this is, you know, just kind of based on my own experience. I didn't go out and take any national surveys or anything, but PPP in general, I think has been a net positive. I think the business owners in the community have been once they get the loan, they're just absolutely thrilled. They're happy. It can be a real lifeline for their business. But that being said, if there's any frustration, it's with maybe some of the regulation and some of the structure around the program. And you know, as with, I think, you know, similar lending programs, if you get just a regular SBA loan, there's red tape that you have to navigate. And I think that the feedback to Rick's earlier point, if you're working with a banker that you have a relationship with, they are going to be a little bit better equipped to be an advocate for you. A lot of people, I think, tried to take the easier route and maybe apply through like a PayPal or one of the fintech companies, and it's been a little bit different of a process this time. So that's sort of my take on what you asked.
Well, I'm glad to hear that, because when you said you think it's a net positive, that's good news. 'Cause I think coming out of the gates, it was a little rough. I think it was just positive. But being an ex-basketball player, a word that's near and dear to me is rebound. They were able to rebound back from that and make a turn. I think that helped with because it's all about the confidence of what people are getting involved with, and where they want to take that next step or not. And I think one of the things that came out of today's session, the way you explained it, it was easy to grasp. It was real easy to kind of take in. I think when it first came out, people were inundated with information, and it just seemed like it was so technical, and people got confused by it. They were intimidated by it. And I think that that was part of the rebounding process. I think they kind of made it easier to navigate.
I would also say that there are literally multiple dozens of businesses, small businesses in Frederick County that are operating today that, were it not for this program, would have stopped operating back in the summertime, early summer, midsummer. So if there's any doubt in your mind, if there's any question in your mind, I strongly encourage you to reach out to us here at the Chamber, reach out to your banker. And if you have a relationship with a large national bank and have concern about processing a PPP loan through your banker, reach out to one of our small local banks here in Frederick County. We have many and they're all great. But pursue this because it literally could be the difference between you being able to stay open in this time where you don't have full capacity or full ability to do whatever it is you do. This program can help you sustain that. So literally multiple dozens of businesses in Frederick County that are still around with us today because they were able to take advantage of this program last year. So keep watching the news because I do think you'll see congressional action to extend this program, particularly as a companion to the American Rescue Plan that's in effect now, that is sort of the next in a series of these big stimulus bills. So I think this program will be extended by as much as 45 days. And so you may not have that March 31st deadline, but why wait? If this feels possible to you, get on it today. And we here at the Chamber have helped hundreds of businesses obtain and access these kinds of funds. We can help you too. If it's something you're thinking about, we'll point you in the direction of a lender we think can work with you based on your circumstance. But don't wait. If you think there's a possibility, fill out the application and get that process started and get it started as soon as you can.
Chris, a question just came in and maybe it could be answered real quickly. It said, what are the repayment terms of PPP loans and the new rules of loan forgiveness?
Yes. So here's the here's the thing. As long as the funds are used within the parameters of the program, we've had very good luck helping borrowers get forgiveness. And I speak to, sort of my own institution. When we have a application for forgiveness, the application comes into the bank first, and the bank does what it can to make sure that the information that was provided allows for maximum forgiveness. And we'll try and be an advocate for you. If we've had cases where, a borrower sends something in and they're not getting full forgiveness. And we say, well, wait a second, look, you could have used this, and this, and try and get you up to that full forgiveness number. So I think it's something where try not to worry as much about the repayment terms and instead use the money the way that the program wants you to use it, and you can get the loan forgiven. The key is, though, just make sure that you don't spend the money on things that aren't permissible within the program.
Right.
That's just it. But the repayment terms, so let's say you decide not to file for forgiveness. I don't know why you wouldn't, but let's say, hey, I want to pay it back. I don't want to get it forgiven. The terms are basically that you don't have to make a payment until 10 months after the end of your covered period. Your covered period being the 24 weeks from the time you get your loan to the time you have to spend all the money. At the end of that 24 weeks, the 10-month counter starts. And after that, you would start to make equal principal and interest payments. The rate is still 1%, which is great. But the problem is the repayment terms are within a 2-year maturity. So you have to pay it back really quickly, which is why we're really pushing people, just get it forgiven. It's treat it as a grant, apply for forgiveness as soon as you're able to, and just get it stricken off the books. It's to have that money given to you to keep employees paid or pay other qualified expenses. Just get it forgiven. Go through the process. We'll help. So go ahead, Sherman. I know we had a couple questions popping up.
Are there any tax implications on forgiveness?
Yes. So the federal government passed an amendment to the PPP program to where forgiveness is now you don't have to essentially, and I'm going to put it out there right now. I'm not an accountant, but my read of it is that there are not tax implications from a federal basis, though I have heard that some states still could be reserving the right to tax that income, tax it as income. So I strongly recommend you talk to your accountant about it.
Mhm.
But you know, at the end of the day, if you get a grant and you have to pay some tax on it, you know, you just have to weigh the pros and cons of that.
Yeah.
Also, payroll providers. If you use a payroll provider, if you know, as opposed to if you're a sole proprietor, you're probably using QuickBooks or something like that. But if you do use a payroll provider, talk to them before you begin the process, because they are the entity that's going to be providing you the bulk of the backup data that will need to accompany your PPP application. And when you get into the PPP application, the buckets through which you intend to use this money are already defined for you to make sure that your chance for forgiveness is very high. So you're telling the SBA through your fiduciary partner what you're going to use these proceeds for, and their check boxes. And if you in fact use those dollars in that manner, your likelihood of forgiveness is very high. I know very few entities that access first round PPP that are not either getting, have gotten, or will get full forgiveness on their first round draw.
I just wanted to add real quickly, I hope you realize you had two valuable resources today, two valuable resources and two esteemed gentlemen who are leaders in the community. I want to take my hat off to Chris, but I also want to give a plug to Rick Weller in the chamber. They did not close the doors during the pandemic at all. They were there to help small businesses, large businesses, any business during the pandemic. And I know it wasn't easy, but I just want to make sure I recognize leadership in the Frederick County Chamber for reaching out during these desperate times, and to let people know that you were there and you helped a lot of people.
Thanks, Sherman. And one thing I guess I'd like to say on Woodsboro Bank's behalf for all of you, I talked at the outset about our Racial Equity Leadership Council. The president of Woodsboro Bank, Steve Hine, has been a foundational member of our Racial Equity Leadership Council. So this is not just bank advertising. This is a bank that is committed to all sectors of this community, increasing economic opportunity in all sectors of this community, from the president of the bank down to the frontline tellers that you interact with when you go into a Woodsboro Bank branch. So I wanted to make sure I took that opportunity both to thank Chris for being, you know, our spokesman and presenter today, but also Steve and the board and the bank leadership who are truly committed to serving our underserved communities in a way that helps grow economic opportunity for all, which is what this is all about.
Thank you, Rick. Appreciate that.
We will make this content evergreen. Caitlin is recording it now, and we'll process the recording and we'll put that up on our website and throughout all our social media. So if you missed a point, you'll be able tomorrow, as early as tomorrow, to be able to access this webinar as recorded content. Any questions, reach out to me. It's rweldon@frederickchamber.org. Happy to talk to you and happy to make an introduction. Making connections and introductions to grow business is what my job title is all about. And I thank my partners and friends, Sherman and Chris, for helping us make that more than just a promise. So thank you, everyone. Appreciate your time and attention. Look forward to talking to you soon. Thank you.
Thank you, Rick.